Hello and welcome to this session in which we would look at treasury stock, an example of treasury stock, and retirement of treasury stock. And specifically, we will be using the cost method. We did explain the cost method in the prior session, how to account for treasury stock using the cost method. So what's different in this example? The only difference in this example is I will be adding the retirement of treasury stock. It means when you get rid of the treasury stock, when you basically kind of delete it from existence. You don't want it anymore. Now, there are two methods to do so. There is the cost method and there's the par value method. In this session, we'll focus on the cost method, and I do have a recording for the par value method, issuing and retiring the treasury stock. So let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, FarhatLectures.com. Our intermediate accounting course is best for online students and students who are taking intermediate accounting courses. Our course covers all the essentials from the financial statements, time value of money, inventory, property, plant and equipment, investments, derivatives, pension, equity, earnings per share, and of course, the statement of cash flows. Our course includes lectures, multiple choice, true, false, as well as exercises. Go ahead and start your free trial today. We are here to help. Your success starts here. First, the company issues 8,000 shares, $2 par value common stock at $10 per share. First, we are going to issue the shares. What does that mean? It means we sell the shares and get our money back. We sell the shares and get some money back. So as far as we're concerned, we sold 8,000 shares at $10. We debit cash 80,000. We credit common stock. How much do we credit common stock? I hope we know this by heart. The number of shares times the par value, which is 16,000. Anything else will be additional paid in capital or capital surplus, which is 64,000. What we did now, we issued the stock. At some point, the company might have money, some extra cash, and they want to buy back those stocks. And this is what treasury stock is, buying back your own stock. First, we're going to buy some stocks above the issue price. Now, here's what I want to tell you. Since we are using the cost method for this example, it does not matter whether we buy them above or below as far as gain and concern. When we buy back the stock for the cost method, it doesn't matter if we buy them above or below the issue price, because the cost method don't account for those differences, which is in quote gains and losses, until you reissue them. So when we buy them back, it's pretty straightforward. If we bought 500 shares at $12, we debit treasury stock at cost, which is different than the par value. Under the par value, we debit and credit treasury stock at par, and we account for the, in quote, gain and losses when we buy them back. Not for the cost method. For the cost method, we debit treasury stock at cost, which is $12, and we paid $6,000 in cash. We credit in cash. No gain or loss when repurchased. When do we account for those differences, gains and losses? When we reissue those shares. Now, let's assume we reissue 200 shares of treasury stock at 12 for the one that we bought at 12 for $15. Remember, we purchased 500. Of those 500, we are reissuing. We decided to resell 200 shares and we sold them at 15. What do we know if we sold them at 15? What information do we have? If we sold them at 15, we have $3 profit, in quote, per share, and we're selling 200 shares. It means we have $600 profit. How do we book this entry? Start with cash. If we sold 200 shares at 15, you received $3,000 in cash. Then you remove treasury stock at cost. What's the cost? $12. Well, we remove treasury stock at cost. The difference is 600. Now, this difference is the profit. Where do I book a profit? I book a profit in an account called paid in capital treasury stock, or additional paid in capital treasury stock, APIC treasury stock. Now, this account is important. Why? Because this is where I park my gains. So this is where I park, in quote, and I use, in quote, the gain or the profit of 600.
What should you do now? Whether you are a CPA exam candidate, accounting student, finance, CPA, CMA, it does not really matter. Go to Farhat lectures for additional resources. The best investment you can make is invest in yourself. Good luck, study hard, and of course, stay safe.